Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. If you guys are looking for undervalued investment opportunities, click subscribe. Join the channel, let's ride this commodity bull market up together. And in this clip, I'm doing market conditions. It's technical analysis, it's got some other stuff in here. I'm going to talk about some of the market conditions I look at and how they're changing. Now, I don't think these are going to change for a very long term. I think they're going to be short-term pullbacks because I still think that the real estate market, everything's intact. We still have shortages. Now, we are investors, all right? That's how what I identify as myself. I'm an investor. I'm long-term holder. I think the market conditions in housing are not repairable on the long term unless we build more homes. Now, in the short term, it's game for anything. In the long term, I think we have to build them. So I know we've got some signals here that could potentially be signaling that we could have a short-term pullback. And we could. The question then is, you have to ask yourself, are we going to hold through it? Or am I going to raise money and keep some more cash? That's up to you. I'm riding through it. So whatever comes ahead of us, the ratios are still so cheap on everything that I still think that the values are good and there's no reason to sell. But that doesn't mean that volatility and movements up and down aren't going to shake people. So you have to be aware and really know this stuff inside and out to stick the course through the entire bull market. And that's going to be tough for a lot of people. It may even be tough for me. But right now, with the ratios where they're at on all of the assets, I'm riding it through. And with the Federal Reserve saying that there's a lot of inflation, that they may have to raise rates, they're afraid to come out with that. So I'm holding on. But let's get into the technical analysis and market conditions that I'm looking at. So here we go. Here's copper price. You can see that the price did break the uptrend here. Now, this just means that we could potentially have a pullback. We've been in a pretty ferocious uptrend here. So yeah, maybe we come all the way back to the 200-day, or maybe we come somewhere down lower than where we're at today. But it did break its uptrend, just to let everybody know. Here's the 10-year U.S. Treasury yield. This is what I think happened. And you know, I am a little bit conspiracy in me, but it moved on higher. It got, I think the market itself was like, they'll probably keep rates low, maybe not, maybe they'll raise rates. I don't think they really know what was going on. I think that the Federal Reserve or the market, I think the Federal Reserve pushed this lower before they were going to release that they were probably going to raise rates before some time frame, or raise it at some time frame. And they were expecting a large move higher in bond yields. And you saw the big move higher in bond yields. The dollar, we broke this downtrend here to the upside. It's coming back. Will it strengthen? If we have inflation, it shouldn't. It should be diving lower. So I think it's going to continue lower, not move up. But in the short term, I'm not exactly sure. It could pull a little bit higher. Gold did sell off. Again, this is delayed by 1 day. It is coming down until something turns this around. I'd just be holding on. Silver doesn't look as bad. We are kind of moving sideways, but it does have the potential to head a little bit lower. But we do have buyers out there. We still have high premiums on physical metals. So it's not a given. Remember, this is just statistical probabilities. Lumber has pulled back, but we are finding some footing here. It is slowing this rate down. So what they usually do, or what they say about lumber, is when lumber pulls back, lumber goes up before a housing boom, and then when I look at lumber, I don't really see the correlation after just the beginning surge. I would think that the abilities for supply demand to catch up for lumber are quite quick. So I would think that this would fall naturally quite quickly. We did break the uptrend line to the downside. And some people say that this is a weakness in the economy. That's why it broke to the downside. And if you were to price this in lumber to gold ratio, it looks very similar to the price of lumber because lumber is the one doing all the volatility. So what I see is, maybe we do have short-term pain coming in front of us. Maybe we don't. Remember, these are just conditions that it's identifying, not the actual outcomes. It's conditions. It's like driving. It'd be like if you were a race car driver, and you really liked and you would win the majority of the time in the wet. That we are choosing only to race in the wet conditions, and that's what this is showing us: is that the conditions are changing a little bit, and we could see a short-term pullback. But it doesn't mean you'll 100% have one. It just means the conditions are changing. And here's platinum. That's pulling back just like the other ones too. So now I know somebody wanted me to go over the home builder sentiment versus the home buyer sentiment. Home buyer sentiment has been declining, and I think it turned over and declined quite substantially with the home builder sentiment being pretty high. If you look in history, you could say that these are correlated with the home buyer sentiment leading the home builder sentiment on the majority of these moves. Will this lead lower? I don't know. But there's never been a larger disparity between the home builder sentiment and the home buyer sentiment ever, because this went down and this has remained elevated pretty high. And the only other gap I can see is this gap here. So could the market come back in real estate? Yes, it very well could if this is a good indicator. And I would say that this fell down here and was a false indicator. I think the 90s was a pretty good move too. So I don't know how much weight I would put on this. I don't use home buyer sentiment for a lot of things. What I do use is the housing inventory. And the housing inventory is extremely low. So I could see how sentiment in home buyers are going to be low because they can't buy any homes. The inventory is so low that they're probably getting discouraged and they can't even find a house because they're all sold. So I don't know if the situation is so dire that home buyers' sentiment's going down because there's just not enough inventory to buy, which then pushes the home builder sentiment far up, which makes sense. But that's just a narrative. We'll see what happens. And then they released data on the new privately owned housing starts. It was at 1572, basically flat. They said that lumber prices kind of thwarted the big move higher. So that was flat, but it's still in an expansionary phase. And then we've got new privately owned, these are permits, and the permits are still pretty high at 1.68 million. So that's still in the expansion phase of real estate. Looking at mortgage debt service payments as a percent of disposable personal income, this has never been lower. So in America as a whole, we've never seen mortgage debt service payments in relationship to percent of disposable personal income as low as it is today. I know that sounds weird. Housing inventory and median days. This is median days on the market. How long houses are on the market. We are very, very low compared to history. Here's consumer debt service payments as a percent of disposable personal income. I would say it is below average. So we don't have as much consumer debt service payments as some of our high periods like the early 2000s or the mid 1980s. Household financial obligations as a percent of disposable personal income is also very low. Very low. And home vacancy rate for the United States is at very, very low numbers. So the conditions, there are some things flashing warning. Copper's broke its uptrend. Not that I'm too worried about that yet. Remember, we have to see a big move lower. And we've got lumber going down, and the lumber to gold ratio is declining. And I would suspect that the copper to gold ratio is also moving in an unfavorable way. But you're going to always have these pullbacks. So you're going to have to wait. You're going to have to see how long this persists. And if it lasts for a couple of weeks and the trend is quite strong, then you may have, if you want to take action, I would transfer some money into cash and just wait. I'll do another market condition. I'll do it maybe once a week, and we'll see how this stuff correlates. Now, what I use as the ultimate indicator is really inventory, and that drives real estate prices. So if prices are going up and inventory is very low, I think everything's still game on, and that it's just normal pullbacks of lumber being in a overbought situation. It went vertical. We've got more supply coming on. So I think that will resolve itself with lower prices anyway. And copper's had a ferocious move. It went really high, and I think we're probably going to pull back a little, and then I think we're going to head higher over time. So I think all these indicators, I think they're just doing a little bit of pullbacks. I don't think we're at like a market top or anything like that. But in a short term, you never know. Maybe we do. And with the Federal Reserve coming out saying that they're probably going to raise rates sooner than what they thought, we probably have an inflation problem, and we're in all the inflation stuff. So I think we're in the right spot at the right time, in the right companies, hopefully. If you guys like this content, give me a thumbs up, please. Leave comments below if you guys have anything, and thank you for listening. This is Finding Value.